Welcome back, everybody, for another deep dive. So today, we're going to the crossroads of cryptocurrency, global markets, and even a touch of AI. Get this, we've got a crypto podcast transcript with some pretty bold predictions, breaking news articles that might make you raise an eyebrow, and a glimpse into some recent market moves.
Fascinating mix, right? We got political undercurrents, market volatility,
Yeah.
and wait for it, Bitcoin-powered flag football in Abu Dhabi.
Okay, yeah, that last one caught me off guard too. But hey, that's what we do in these deep dives, right? We explore these seemingly unconnected stories and try to uncover what it all means for you.
Sounds like a plan.
So let's start with this crypto podcast transcript, Blockchain DXB. They're saying, fasten your seatbelts, folks, because the crypto market is in for a wild ride.
Oh, they're not mincing words, are they? And their analysis is pointing to altcoins as the source of this potential volatility.
Right. They're claiming that global crypto volume is actually up, but the overall market is down, and they think altcoins are about to crash. They even they even went so far as to link Biden to market instability and predict a Bitcoin surge if Trump gets reelected.
It's always interesting how political commentary gets mixed in with market analysis, but remember, we're here to break down the information, not to endorse any particular political viewpoint. What's really fascinating to me is how all this talk about altcoin volatility contrasts with MicroStrategy's recent move. They just bought a massive amount of Bitcoin, 55,500 to be exact, bringing their total holdings to over 386,000 Bitcoins, worth about $37.6 billion.
Wow. That's serious faith in Bitcoin, especially with this podcast predicting a market crash. What do you think about MicroStrategy's strategy here? Do you think they know something we don't?
Well, it's hard to say for sure, but this whale move suggests that some major players are viewing Bitcoin as a safe haven asset, especially if it's the current economic uncertainty. Almost like they're saying, we're betting on Bitcoin, not the altcoin frenzy. It definitely raises questions about how the average investor should be approaching this landscape.
Yeah, absolutely. So we've got this podcast sounding the alarm. We've got this major company doubling down on Bitcoin. It really makes you wonder what to think. But let's shift gears a bit and look at how traditional finance is starting to interact with crypto. The CFTC, the Commodity Futures Trading Commission, is recommending expanding the use of something called tokenized collateral in derivatives markets.
Now, this is where it gets interesting.
Yeah.
Imagine owning a digital trading card. That represents a piece of real estate. That's essentially what tokenized collateral is. You're using digital tokens, kind of like NFTs, as proof of ownership to back loans and other financial agreements. And the CFTC thinks blockchain technology can make this process super efficient.
So instead of mountains of paperwork, waiting for intermediaries, you could prove ownership and transfer value almost instantly.
Exactly. And we're already seeing this idea in action with Cantor Fitzgerald. They're launching a $2 billion Bitcoin-backed lending program with Tether.
Wait, so you're telling me people can borrow actual dollars using their Bitcoin as collateral?
That's the gist of it.
Yeah.
And it's a significant move because it signals that traditional finance is starting to recognize the potential of crypto. If this program takes off, we could see even more traditional institutions dipping their toes into the crypto waters.
That's really interesting. But it makes me think back to the collapses of platforms like BlockFi and Celsius. Didn't those companies also offer Bitcoin-backed loans? And didn't things end badly?
You raise a valid point. The failures of BlockFi and Celsius serve as a stark reminder that these innovative financial products also come with inherent risks.
So maybe we should unpack those risks a bit before we get carried away with the hype.
Absolutely. Let's take a closer look at some of the potential pitfalls, using the BlockFi and Celsius situations as cautionary examples. I think it's important for everyone to be aware of these risks before getting involved in anything like this.
So let's talk about these risks with Bitcoin-backed lending. I think the biggest one that comes to mind is Bitcoin's volatility. We all know how much the price can swing.
Yeah, that's a major factor. That volatility can trigger what's called a margin call, which basically means the lender demands you put up more collateral. If the price of Bitcoin drops too low and you can't meet that margin call, you risk having your Bitcoin liquidated. We saw that happen a lot during the 2022 bear market, and it wasn't pretty.
It sounds like a recipe for disaster, especially if you're new to crypto.
Yeah, it can be if you're not careful.
Mm.
That's just one risk. We also have to consider the stability of the platform itself. BlockFi and Celsius, they both made some risky investment decisions, and ultimately that led to their downfall. They weren't able to meet their obligations to customers, and a lot of people lost money.
So it's not just about Bitcoin's volatility, it's also about the risk that the platform itself could collapse.
Exactly. Choosing a stable and well-managed platform is critical. But it's also important to remember that even the most reputable platforms are not banks. They don't have the same level of regulatory oversight or deposit insurance.
That's a good point. I mean, it makes you realize that there's a real need for more transparency and consumer protection in this space, especially when you think about how platforms like Celsius and BlockFi, they weren't always upfront about their operations. And then you've got Tether, which has had its own controversies regarding its reserves.
Transparency is definitely key. And let's not forget about security risks, too. Both BlockFi and Celsius experienced security breaches, which just eroded trust in their platforms even further. When you deposit your Bitcoin with a third party, you're trusting them to keep it safe.
That reminds me of the whole not your keys, not your Bitcoin philosophy, the idea that if you don't control your private keys, you don't truly own your Bitcoin.
That's a core principle for a lot of Bitcoin enthusiasts. They believe that self-custody is the only way to truly mitigate these risks. It's definitely something to consider when you're evaluating these lending programs.
Yeah, it definitely makes you think twice. Okay, so we've talked about the risks, the dark side of Bitcoin-backed lending. But it's not all doom and gloom, is it? There are some positive developments, too, like ZA Bank in Hong Kong becoming the first bank in Asia to offer retail crypto trading.
That's a really interesting development. They're trying to make crypto trading more accessible by allowing people to buy and sell Bitcoin and Ethereum directly through their banking app, using HKD and USD, no need for separate crypto exchanges.
It's a smart move, especially when you consider that a recent survey found that 70% of respondents believe that bank-backed crypto services could really popularize crypto trading. I mean, it makes sense, right? People already trust their banks. Why not offer these services in a way that feels familiar and secure?
Yeah, it's a compelling argument. If banks can provide a seamless and regulated way to interact with crypto, it could really remove a lot of the barriers to entry. It would be interesting to see if other banks follow suit. The question is, will regulators be on board?
Right. There are still a lot of concerns about crypto's volatility and potential risks. I imagine governments will be pretty cautious about allowing banks to just dive headfirst into this space.
Yeah, it's a balancing act for sure. But if banks can demonstrate that they can offer these services responsibly, it could be a real game changer.
Yeah, it could really bridge that gap between the traditional financial world and this new frontier of crypto. Okay, so we've got crypto markets swinging, we've got traditional finance taking notice, and now, get this, we're headed to Saudi Arabia for some AI innovation.
It seems Gcor and EsDTech are teaming up to create what they're calling an AI factory in Saudi Arabia, powered by tens of thousands of GPUs. Those specialized chips essential for AI development.
Wow, that's a serious investment in AI infrastructure. What's the thinking behind this? Are they just trying to catch up? Or is there something bigger going on here?
I think this aligns with Saudi Arabia's Vision 2030 plan. They're not just trying to keep pace. They want to be a global leader in technology and innovation, and AI is a core focus.
So they're playing the long game here, making a strategic bet on AI to transform their economy.
Exactly, and it makes you wonder, what kind of impact will this have on the global AI landscape? Will we see a power shift as countries like Saudi Arabia invest heavily in this technology?
That's a fascinating question. Okay, but before we get too deep into the geopolitical implications of AI, we have one last stop on our deep dive today, and it's a bit unexpected to say the least. We're going to Abu Dhabi for, wait for it, Bitcoin-powered flag football.
Now that's a headline I didn't see coming.
I know, right? Apparently, NFL legends like Russell Okung and Antonio Brown are going to be competing in a flag football game where the prizes are paid out in Bitcoin.
What's interesting here is that this isn't just some random publicity stunt. This game is tied into the Bitcoin M&A conference in Abu Dhabi. It's like they're trying to merge the worlds of sports, technology, and finance.
And it seems to be working. You know, Russell Okung, he was actually the first NFL player to get paid in Bitcoin. He's a big advocate for financial sovereignty and the power of blockchain technology.
His involvement definitely adds a whole new dimension to this event. It's not just about entertainment. It's about promoting awareness and sparking conversations about these emerging technologies.
I love how this seemingly random event connects back to the bigger themes we've been discussing. So to recap, we've got crypto markets on a roller coaster ride, traditional finance cautiously dipping its toes into the crypto waters, a major AI power play in Saudi Arabia, and Bitcoin hitting the gridiron in Abu Dhabi. It's a lot to process.
It is, but it highlights how interconnected these seemingly disparate trends really are. We're seeing the lines between finance, technology, and even sports beginning to blur.
And that brings us to the big question. What does all of this mean for you?
Yeah, that's the million-dollar question, isn't it?
Yeah.
How will you navigate this changing world? Will you be a spectator watching from the sidelines? or will you become an active participant?
Will you be cheering from the stands or stepping onto the field?
These are all great questions to consider. But one of the key takeaways I see from today's deep dive is that the world is changing really fast, like faster than ever before. This whole convergence of crypto, AI, global market forces, it's creating opportunities, but also challenges. It's up to each of us to figure out how we want to engage with this new landscape.
Yeah, no kidding. It's a lot to wrap your head around, all these incredible innovations emerging. But then we also see those cautionary tales. It's like a tightrope walk
Yeah.
between embracing the potential and
Proceeding with caution.
I think you said it perfectly. It's all about finding that balance. We can't let fear hold us back, but we also need to be smart, informed, and aware of the potential downsides.
So education and critical thinking are more important now than ever. Absolutely.
Yeah.
Don't just buy into the hype or get caught up in all the fear-mongering. Do your own research, ask questions, and challenge assumptions. There's always more to learn.
Speaking of learning, I wanted to circle back to something we talked about earlier, that Bitball flag football game in Abu Dhabi. It's such a quirky story, but I think it speaks to a larger trend. What do you think about the significance of that event?
To me, it really highlights how crypto is moving beyond just a niche technology and entering the mainstream. You see it popping up in sports, entertainment, even everyday transactions. It's not just for tech enthusiasts anymore. It's becoming part of the global conversation.
And it's happening in Abu Dhabi, which
Yeah.
is interesting in itself. It signals that the Middle East is becoming a real hub for crypto innovation. And when you combine that with Saudi Arabia's AI ambitions, it paints a fascinating picture of a region that's poised to be at the forefront of technological advancement.
Yeah, and it makes you wonder, how will these shifts in power dynamics reshape the world? What happens when emerging economies take the lead in these transformative technologies? How will that impact the global balance of power?
Wow, those are some big questions. Okay, well, before we leave everyone with some serious existential pondering, let's just do a quick recap of what we covered today. We started with the crypto market roller coaster, all those warnings of a potential altcoin crash, but then also that massive Bitcoin purchase by MicroStrategy.
Right, and then we explored the bridge between traditional finance and crypto,
Yeah.
looking at the CFTC's interest in tokenized collateral and Cantor Fitzgerald's Bitcoin-backed lending program. We also did a deep dive into the risks associated with those new financial products, using the failures of BlockFi and Celsius as cautionary tales.
And of course, we couldn't resist that quick trip to Saudi Arabia to check out their ambitious AI factory. And then we finished with a touchdown in Abu Dhabi for some Bitcoin-powered flag football. Quite a journey.
It was. But it all comes back to that central theme of change and disruption. This is a technological revolution that's transforming the financial landscape, the global power dynamics, even the way we interact with the world.
So the big takeaway for our listeners today, be prepared to adapt.
Exactly. Stay informed, be curious, and don't be afraid to challenge the status quo. The future is unfolding right in front of us, and it's up to each of us to decide how we want to participate.
Great note to end on, but before we sign off, I want to leave our listeners with one final thought. We spent a lot of time talking about the risks and potential pitfalls of those centralized crypto platforms, but there's another side to this story that we didn't really get into today. The rise of decentralized finance, or DeFi.
DeFi. The idea of creating a financial system that's open and transparent, accessible to everyone, without needing those traditional intermediaries like banks.
It sounds both futuristic and a little bit daunting, but hey, that's what the deep dive is all about, right? Delving into these complex topics and making them understandable. And I, for one, am ready to go down the DeFi rabbit hole.
Excellent. I think you'll find it fascinating. DeFi is basically an ecosystem of financial applications built on blockchain technology, primarily Ethereum. The goal is to create a more inclusive and equitable financial system where anyone with an internet connection can participate.
So instead of going through a bank to get a loan or using a brokerage to trade stocks, you could do all that directly on a blockchain platform.
Exactly. Think of it as peer-to-peer finance, powered by smart contracts. Those are self-executing agreements written in code that automate the entire process.
So let's say I want to take out a loan using DeFi. How would that work?
Well, you would go to a DeFi lending platform, and you deposit some cryptocurrency as collateral. The platform would then connect you with a lender who's willing to provide a loan at a certain interest rate. All the terms of the loan, like their payment schedule, would be clearly defined in a smart contract.
And because it's all automated through smart contracts, there's no need for a bank to process the loan or a credit check to see if I'm eligible.
Precisely. DeFi removes the need for those traditional gatekeepers. It's about creating a more open and accessible financial system where anyone can participate, regardless of their background or credit history.
That sounds revolutionary. But what about the risks? We talked about all the potential problems with the centralized platforms like BlockFi and Celsius. Are there similar risks with DeFi?
Well, there are definitely some risks to keep in mind. One of the biggest challenges with DeFi is the complexity of the technology. It's still relatively new, and the user interfaces can be pretty challenging to navigate, even for people who are familiar with crypto.
So there's a pretty steep learning curve. What else?
There's also the risk of smart contract vulnerabilities. If there's a bug in the code, it could lead to a loss of funds. And because these platforms are decentralized, there's no central authority to turn to if something goes wrong. You're essentially responsible for your own security and do your due diligence.
So it sounds like there's a lot of potential with DeFi, but also a lot that could go wrong.
That's a good way to put it. It's a brand new technology with enormous potential, but it definitely comes with inherent risks. It's smart to approach DeFi with cautious optimism. Do your research and make sure you understand the risks before you jump in head first.
Well, and I'm glad we took this little detour into DeFi. It's given me a lot to think about, and it seems like the perfect topic for our next deep dive.
I agree. There's a whole world to explore within decentralized finance.
So to all our listeners out there, if you enjoyed this deep dive into crypto.ai global markets and that little glimpse into DeFi, be sure to subscribe to the deep dive. We'll have more thought-provoking conversations and explorations coming soon. And don't forget to check out the show notes for links to all the sources we talked about today. Until next time, stay curious, keep learning,
And keep exploring.